Welcome to Mali Investment Talks. For those who want a quick reminder, the word Mali actually means wealth, at least in East Africa. So welcome to Wealth Investment Talks. My name is Joseph Areu, and I am your host in this series of talks. And ladies and gentlemen, you remember when we last had a chat, we talked about investment goals. And one of the investment goals, the first one actually we talked about, is short-term investment goals. And that is what I want us to talk about today. And so if you recall, the key options or investment instruments or products to choose from are of two main types. So firstly, we have what we call fixed income investment options or investment instruments. And these are treasury bills and fixed deposits. And depending on your country of abode or the market you are in, you could also have what we call corporate paper. But in Uganda, most of East Africa, where I am based, it's mostly treasury bills and fixed deposits. Secondly, besides fixed income, you can also invest your money for the short term in what we call money market unit trusts. Okay? In some countries, they call them mutual funds. But in our region, we mostly call them unit trusts. So I am going to be discussing each of these investment options in the subsequent discussions. And always remember, whenever you need any further details, you want to know more about how to go about these investments, just give me a call, get in touch with me using the contacts that are or will be on your screen. So right away, let us start talking about treasury bills. So what are treasury bills? A treasury bill is basically a short-term loan to the treasury, meaning to the government. You, the investor, are lending the government your money for them to use in whatever way for a short-term period of time. And as I said earlier, short-term means 1 year or less. In the case of treasury bills, there are three maturities. In other words, there are three distinct periods of time over which you can invest. And those are 1, 3 months. So you can lend your government money for 3 months or 91 days. 2, 6 months or 182 days. Or 3, for 12 months or 364 days. Those are what we call the maturities, the available maturities, possible maturities for which you can invest or lend your money to government. Treasury bills are issued once every 2 weeks, at least in Uganda. So every 2 weeks, the government will invite offers from the public to purchase or to basically lend them money through the treasury bill instruments. So I guess the first thing I need to say about treasury bills is to just demystify them. Treasury bills are open to basically anybody who is able and willing to invest. Sometimes there is a myth that treasury bills or treasury securities are for a certain category of investors. That is not true. So basically anyone can invest. In Uganda, you need a minimum of 100,000 shillings in order to invest in treasury bills. So you don't need to have so much money to invest in treasury bills. So what happens is the government will take your money and offer you a fixed rate of return or rate of interest, depending on the maturity that you have gone in for or that you have chosen. So there will be a rate of interest for the 3 months investment, there'll be another one for the 6 months, and then there'll be another one for the 12 months. Okay? That will then determine how much return you get in the future. So I want us to explore possible returns, possible income if you are given or if you invest at a particular rate. How much money do you expect to earn? So let's assume that you invest 10 million shillings. If you invest 10 million shillings, say sometime today, for 91 days, that is for 3 months. Just for simplicity, let's say that you get a rate of 10% per annum. You need to know that the income on Treasury bills is taxed at a rate of 20% at the moment. 20% of the income, not the investment. Okay? So if you do that, for 3 months, if you invest 10 million shillings today, after 3 months, the yield or the income you will have earned will come to 250,000 shillings after 3 months. That's before tax. Okay? And the government will take off its tax of 50,000 shillings. That's 20% of 250,000, leaving you with the income of 200,000 shillings. So the total amount of money that the government will pay you after 3 months will be your 10 million. So you'll be paid back your 10 million plus 200,000 being the interest that you will have earned in 3 months. Okay. Suppose you had invested the same 10 million in a 6-month maturity. That means you have loaned the government this 10 million for 182 days. And suppose you are getting the same yield. Actually, usually the longer the maturity, the higher the yield you are likely to get. So let's say 11%, okay? Now, the tax rate doesn't change, 20%. So the total gross income you will get at the end of 6 months will be 550,000. The tax that will be deducted will be 110,000. And so at the end of the 6 months, your net income, the total proceeds that government will pay you will be 10,440,000. The 10 million is what you invested in the first place, and the 440,000 is your income at the end of the 6 months. Finally, suppose you invest the same 10 million, but this time you invest it for 364 days or for 12 months. The yield again is likely to be higher, slightly higher. So suppose it's 12%, okay? Then the tax rate will be the same. The total yield you will get, the total income you will get after the 12 months will be 1.2 million. The government will take off its tax of 240,000. At the end of the 12 months or 1 year, you will then be paid 10,900,000. 960,000. So 10 million being what you invested, 960,000 being what you earned. So that is how a treasury bill works in simple terms. So you invest a given amount of money, the government then promises you as a return of a particular rate, and you agree. Of course, you are told how much the money will be with them, and then you are paid. You sit back and wait, and you are paid back what you invested plus the amount that you will have earned at once. Thank you very much. Let me know if you need any further clarifications. Give me a call, or if you need help to actually make this investment. Thank you.